You'll get to know the 7 assets that are safer and better than cash. The seventh asset is not known to many, and people confuse it with a waste of money. So keep watching this video till the end to know it. Now let's start. Number 1. Precious metals, gold, silver, and platinum. One of the primary reasons currency holds value is its role in preserving wealth for future use. However, with governments continuously increasing the money supply to cover deficits, there is uncertainty regarding when that dollar bill may depreciate in value. Consequently, it is recommended to consider investments in assets that are both scarce and challenging to create. Wealthy individuals consistently allocate a segment of their portfolios to precious metals such as gold, silver, and platinum, as these assets tend to increase in value during times of elevated inflation. For instance, during the 1950s, an ounce of gold was available for $400. By 2025, that same ounce commands a price exceeding $3,200 in the marketplace. According to Prime XBT's projections for gold, it is expected to hit $10,000 by 2032. This suggests that in about a decade, your gold investments could potentially increase fivefold, even as the value of currency continues to diminish. The value of gold is on the rise, and other precious metals are becoming more attractive compared to holding cash in a bank. Number 2. Industrial commodities. While scarcity contributes to the value of precious metals, their inherent worth also establishes them as vital industrial commodities. For example, silver plays a crucial role in the production of electronics, medical equipment, nuclear reactors, and various other products. Much like copper, other metals such as cobalt and nickel are experiencing significant demand in the industrial sector due to their unique properties that are challenging for alternative materials to replicate. To provide a clearer understanding, the demand for cobalt has surged significantly since 2020, largely because of its essential function in the production of electric vehicle batteries. Investing in industrial commodities can enhance your portfolio, particularly during periods of elevated demand. Subscribe to our channel and also press the like button to know more about such assets. Number 3. Secure currencies. Geopolitical stability plays a crucial role in your investment decisions, especially in today's landscape of fiat currencies, where traditional backing by gold is no longer present. For this reason, affluent individuals often choose to keep their funds in Swiss banks. The Swiss franc is often viewed as a secure asset during periods of economic turbulence and instability. This has been consistently demonstrated, notably during the Eurozone debt crisis in 2009 and the global financial crisis in 2008, when significant capital flows moved from these regions to Switzerland to protect against potential wealth erosion caused by currency devaluation. Switzerland presents a notably stable geopolitical landscape, underpinned by one of the most robust economic systems globally. Furthermore, the Swiss franc serves as a valuable alternative to the US dollar in the realm of international trade. For example, when the US implemented sanctions on Russian energy trade, Russia began conducting transactions in Swiss francs. This shift led to a notable increase in demand for the Swiss franc, resulting in a significant appreciation against other currencies in early 2023. Number 4. Government-backed assurance. The stability of your finances is closely tied to the strength of the government that supports them, making investments in sovereign guarantees a prudent choice for preserving value. The government of any nation typically stands as the last entity to default. This is due to the fact that a government default can lead to a nationwide default, which would deter any robust government from issuing loans. It is important to note that currently, No fiat currency globally is supported by gold or any tangible asset. Therefore, these currencies rely on the complete trust and confidence in the issuing government. Government bonds and GSECs represent two of the most secure investment options backed by sovereign guarantees. Number 5. Mutual funds and value stocks. Treasury bond investments provide superior returns compared to cash. However, due to their low-risk nature, they typically generate lower yields than equities. While this represents an essential investment, it aligns with the expectations of a risk-averse investor seeking minimal risk. Nearly every investor seeks to enhance their returns, and equities present an excellent opportunity to achieve that goal. Furthermore, it is important to recognize that stocks vary in their risk profiles. The stock market can generally be divided into two main types: growth stocks and value stocks. Growth stocks, particularly in the technology sector, present an elevated risk profile due to their engagement with concepts and innovations that may have a higher likelihood of not succeeding. Companies with robust fundamentals tend to provide not just consistent price growth, but also reliable dividends. Additionally, industrial metals present a lower risk due to their anticipated demand in the coming years. For individual investors, conducting a comprehensive analysis of the fundamentals of each value stock can be challenging and requires significant time. However, considering dividend-focused mutual funds such as those offered by Vanguard can serve as a viable alternative. Investors may consider index fund Admiral shares due to their attractive dividend yield and a proven history of reliable dividend distributions. Number 6. Property and real estate. There is a compelling rationale behind this perspective. Land is uncommon and consistently sought after, leading accountants to classify it as an asset that does not depreciate. Land has consistently been one of the most valuable assets globally. As the population continues to expand, it is essential to secure land for diverse purposes such as residential areas, educational institutions, manufacturing facilities, agricultural endeavors, and commercial developments. Investing in real estate and land can serve as a strong defense against inflation in your portfolio. These assets are fundamentally tied to land, which consistently maintains demand for residential homes, offices, and commercial properties. Data from a Bloomberg analysis indicates that, despite a notable drop during the 2008 housing crisis, house prices experienced a threefold increase from 1992 to 2020. Consequently, when the dollar's value begins to decrease, maintaining an investment in the real estate market can be advantageous. Owning a fully paid-off home is a significant net worth objective for individuals in their 40s, so it is prudent to begin investing in real estate at an early stage. Many small investors tend to view the real estate market as a consideration for later in life, often limiting their perspective to the property they reside in. Investing in the real estate market doesn't require substantial capital. You can consider REITs, which function as mutual funds specifically targeting real estate investments. One option to consider is securing loans to invest in rental properties. The rental income will not only cover your mortgage payment and associated expenses, but also generate a profit for you. Number 7. Collectibles. Classic automobiles, distinctive artwork, luxury handbags meticulously crafted by skilled artisans. The value of a standard vehicle typically depreciates significantly as soon as it leaves the dealership, often by as much as 50%. In contrast, vintage cars appreciate in value over time, much like fine wine, making them a potentially wise investment. This asset class encompasses limited edition timepieces as well as first editions of celebrated novels. In 2022, A remarkable 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe was sold for an impressive 135 million euros. Given that only two of these vehicles were produced, they represent a unique investment opportunity for auto enthusiasts. In 2017, a Saudi prince made headlines by acquiring the highly debated painting Salvator Mundi by Leonardo da Vinci at a Christie's auction for an impressive sum of $450 million. Now, watch the video appearing on the left side to know why everyone seems to have more money than you. Also, subscribe to our channel to help us hit our first 10,000 subscribers.